Who should you trust more, the banks or the government? I know that's a loaded question, but that's the decisions that we have to make right now in this current economy. And that's what we're going to get into in this week's Money Update. I provide these updates for you for free weekly because it is so important to understand what is going on. We are literally walking into a recession. So stay in the know and follow me for these weekly updates. At this point, unless you have been living under a rock, you have heard of SVB. There is no way to tell what kind of impact this is going to have. We have to let time run its course. But I want to explain that what is going on is not unusual. The only reason why it's a big deal is because of interest rates. We've been hearing about interest rate hikes, okay? This is how our system works. The banking system operates on a fractional reserve system. In English, it means at any point in time, banks are loaning out more money than they actually have in their books. And in most cases, it's at least 10 times more. So if they have $100 of deposits that me and you put in there, right? They can go ahead and loan out $1,000 of deposits, which in theory would not be a problem. The only reason it will become a problem is if we all come back and try to get our $100 at the same time, because that money has been long gone. And that is what happened at SVB. Depositors are trying to go and get their money, but unfortunately, the money wasn't there. So in order for SVB to actually give these people the money, they had to start selling their assets. And unfortunately, their asset had lost a lot of value. They bought bonds at one of the worst times you could buy bonds, right? Because bond prices have gotten so high that their bonds were worthless. Would you buy something that was paying 1.5% interest or 5%, right? It's a no-brainer. So when they went to go sell those bonds, everybody was like, why would I buy that from you when I could go buy it from the source and get like 3 times more, 4 times more than what you're paying me? So they had to sell that at a major loss, which is just causing even more people to try to get their money out, which is just causing an even bigger problem than they already had. This is why I have been telling you for years, literally back on my YouTube channel, it is always good to have cash on hand, because what is happening now is people who had nothing to do with this is suffering. So don't think that your bank is going to be safe because it's a bigger bank or something like this. No, this can happen at any bank. As far as the whole system just collapsing, we don't really know what's going to happen at this point. Banks fail. Bigger banks who were actually prepared will take over that bank that failed. And really, it's a seamless thing, okay? The real problem is if people start getting afraid, right? And then everybody else starts pulling their money out of other bank accounts. So they don't want that to happen. And this is why I was telling you in my last YouTube video, we talked about this. Repetition is so much more important than knowledge. Those in charge have understood the importance of repetition over knowledge, right? Because the truth about the FDIC is they don't even have more than 2% of what they claim they're going to insure, right? That's the knowledge. The repetition is your money is good up to $250K, which most Americans don't even have that, so they're not even worried about it, right? But if they keep on repeating, don't worry, we got you, 250K, 250, like you're gonna just believe that instead of the real truth, which is they don't really have that money at all, which is why they have to just convince us that everything is okay. The majority of the money that we have circulating the economy was literally just poofed into existence. When the banks are loaning you money, they're loaning money that they literally do not have. You don't have to believe me. If you do some light research, you will find that very quick. So then the question becomes, well, who do we trust more? The banks or the government, right? Because the situation I'm in right now is, do I want to keep all my money in the banks? Because let's say my money was in SVB, well, then I was going to be asked out and I don't know how much of my money I'm going to be able to actually recover. I don't know about the timing. That's a very nerve-wracking situation to be in. And that could be the reality for other people if this happens to other banking systems. So do you keep your money in there and trust those companies? Or do you put some of your money into bonds, let's say, right? Bonds are actually paying more than your high yield savings at this point. So should I keep my money with a company who I don't really know what they got going on, right? Or put it with the government who owns the money printers? So I know I'll get my principal back and I know I'll get a stated interest rate, right? Because that's the other piece about it. Right now, there's banks who are giving you 3, 4, 5%, maybe not 5, but 3 or 4% in your savings. But if they need to, they can just poof and switch it, right? And go back down. If you put your money in bonds, those are stated rates. So they have to pay you what they said they're going to pay you. And if you go into the 1 month bonds, for example, that's pretty risk-free, right? I get my money in 1 month, right? At the time of this recording, the 1 month bond has a 4.7 yield. Now that yield is annual, so I'd have to do this for a whole year to actually get that yield on an annual basis. But you just divide that by 12 and that's what your return is going to be, right? So I can either just put my money into these bonds. They're earning more than my savings account is, right? And it's from the government who owns the money printers anyway. So the chance of them defaulting or, some sort of collapse where I can't get my money is slim. I can just have these bonds kind of being reinvested for a certain period of time until I feel like the banking system is a little bit more safer. So I'm definitely going to do a mixture of that because there's a lot of uncertainty going on. And even a bank who might be doing the right thing, of course they don't have dollar for dollar how much loans they have versus deposits, but they still might be more responsible than the others, but they'll still get dragged into this mess because everybody starts to be more fearful. But just keep this in mind. The only people who are in fear are the people who are at first completely oblivious, right? So they're not paying attention to financial news. They're not watching channels like this. They're literally living in la la land. Then when they get the news on mainstream media, it's already too late. It's over for them. The people who are institutional investors, who are big, real estate moguls in the government, in these higher up positions, they are watching these things like a hawk. And what's happening in the economy is always priced in before. So the little person, right, Main Street, they get this news way later. At this point, things have already been priced in, right? Bonds have already been reflecting prices of whether we're going to go up or down or not in the rate. They're selling their assets to kind of front load what's going to happen, right? Or they're shorting the market, right? They're preparing way ahead of time. And maybe you don't have the time to pay attention to all these things at once, right? That's why I consolidate the information for you as much as I possibly can. And if you need help and assistance on what you can do right now to take action to prepare for this recession, watch this video right here.